Vatic Ventures Corp. is a potash exploration company focused on the Korat Basin in Thailand, the world's largest undeveloped potash resource. Vatic's management has extensive potash exploration and development experience in Thailand. Vatic will have marketing advantage compared to Western producers. Drill program commences this spring. Vatic trades on the TSX Venture, symbol VCV, and on Frankfurt, symbol V8V2. Visit our website, vaticventures.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is market historian Bob Hoye. He's the chief investment strategist for chartsandmarkets.com. Welcome back to the show, Bob, and happy weekend.
Yeah, hey, we are. It's Friday, and we're talking the markets, and that's always interesting and enjoyable.
Bob, Facebook has had the biggest one-day drop in stock market history. Can you talk about it?
Yeah, well, everybody knows what it is, and it's been a darling with the internet crowd. And as for myself, I tried to avoid using it because I somehow sort of thought of it, why bother? But at any rate, the stock has been very hot lately, rallied from a decline to 192 at the 1st of July, hit $218 before it went bad, and then gave up something like 22% overnight. It was some company utterances that the street didn't like, and when none of the big markets like in London or New York were open, they marked the stock down, and it stayed down, and it's been down to a 175 level, and it's still there now. And then yesterday, it was Twitter's time, where all of a sudden a statement, and the street didn't like it, and this one's sort of on a 15% decline. Not as harsh, but again, the stock had been acting well, and all of a sudden, wham. So there really is no depth, or perhaps we can say, Jim, one-way market on these things, where the trend was on, and people kept buying the trend. And then all of a sudden, reality hit. I would expect there would be others, but you can't name them ahead of time because, as I said, these were in good uptrends. Yes, on the side of overbought, but there was nothing technical that would say it was about to go suddenly that bad. But it's just the kind of stuff you get within a crash, a broader decline. Maybe it's anticipating that, but also it jogs my memory about the great bubble of 1873, and the New York market went up and peaked in September of that year, and then got weak, and then got very weak, and the very big high-tech company then was Western Union Telegraph. It would have been broadly owned, and had been acting well, going up, and then it got into the whole downdraft hit it, and this was perhaps the major, huge representative high-tech company, and it gave up 40% in 1 week, which was a real killer. So on that bear market, of course, the peak was in September, and the heavy-duty liquidation was late September through October. And then the markets were sort of tested in that November. And you then had some recovery. But in that it was a great financial bubble, and once it was over, the economy headed south really fast. And that's actually the National Bureau of Economic Research, NBER, who is the body that keeps track of recessions and expansions in the U.S. The recession started that October, whereas in 1929 you had the peak of the market in September, and that recession started in August. But this seems to be a feature, Jim, of a great financial mania, whereby a lot of the economy is resting upon or flying with the financial markets, and when the financial markets head south, so does the economy. But at other times in financial history, like when you're not in a bubble climate, then typically the stock market peaks and the economy keeps going up for 11 or 12 months, and that was always fascinating when that happened. And then the economy would weaken. So you would go through this. It would be frustrating for institutional investors because stock market wasn't acting well, but the economy was. And of course, if you were of a mentality that invests based upon the economy, well, you weren't making any money, and you're in fact losing money. So, but anyways, we are in a world of financial mania, new financial era where anything can be done. And then what I think will happen is when the big stock market then rolls over, the economy would head down with it rather quickly. And of course, today you've had the number on the U.S. GDP for the latest quarter was a plus 4.1, I think, increase. So, that's good. It hasn't been there for a long time, but we are in a boom. Everywhere you look, there are boom statements about housing, home prices, although maybe see that in the U.S. and in California, the home sales have slowed down quite sharply. So I think that investors should be very cautious in here. It's been a wonderful gift, a 9-year bull market, and certainly since the election, with the Trump election, it's been party time. So it's time to be kind of cautious.
Well, Bob, Robert Campbell on This Week in Money will be talking about U.S. real estate, and he said the city that's going to see the crash first is Chicago. 1 million people have moved out of the Chicago area because they keep raising taxes to cover their pension default. So he said that's where the first...
That one I hadn't read. That's really important.
It's a scoop here.
Yeah.
So we're just reminding people, listen to This Week in Money. We'll have Alan Marcangelo talking about Vancouver high-end real estate, and we'll also have Robert Campbell from San Diego, who does his famous timing letter, saying Southern California may look a little weak, but Chicago's where the first collapse is going to happen.
Yeah. Now, going back to Vancouver real estate, residential, of course, you've always got the story that you can't go west because there's ocean there. You can't go north because you get too high up the mountains and there's not much room up the valley. So this has always been the feature of when promoting Vancouver real estate. But at the high, with crude oil and commodities and stuff in 1980, up on the North Shore at the British Properties, which isn't old money, but it's money and expense account business types there. Well, those house prices fell to 1/3 of their high within 5 or 6 years. Then the other one was that in Kerrisdale, which is the west side and nice middle class area, it fell in half. So when a real estate market loses its energy, and I think part of it shows up initially with sales volume slowing, and prices can go down quite substantially. So,
right.
Not that I'm making the call here now because I'm not a specialist in it, but I'm just remembering what happened to Vancouver prices after the very enthusiastic peak in 1990.
We'll have more with Bob Hoye right after the break.
Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO, on the TSX Venture Exchange. Rainy Mountain's Brunswick property is located in the Rideout Shear Zone in Ontario. with grab samples running as high as 32 grams per ton gold. A follow-up drill program to test numerous targets located by recent groundwork is planned for early 2018. Please visit our website at rmroyalty.com.
Cypress Development Corp's flagship lithium project is located just east of Albemarle's Silver Peak mine in the heart of Clayton Valley, Nevada. A 12-hole exploration drill program for lithium-enriched claystone on Cypress's 100% controlled properties is now underway. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the pink CYDVF, and on Frankfurt's C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Welcome back. We're speaking with Bob Hoye. Bob, taking a look at commodities, copper has really taken the hugest beating over the last little while. Do you see any hope for it, or is it going to continue to drop?
Oh, you may get a trade off of a brief oversold, but for this year on industrial commodities, our work had suggested a rally out till around March. And you had it with base metals, mind you. Within the base metals, you had a couple of them, like nickel and aluminum, did sharp up rallies in April, and copper didn't participate in that one, other than being firm. And then in May, copper did the straight up and then straight down. So then lumber was absolutely fantastic, huge rally. And on that one, it rang all the technical bells and whistles we got as saying overdone. And the last 2 days of lumber, it's been down limit yesterday and it's down limit today. So it's lumber is now heading down. So on our work on the industrial commodities, up until May, check, yes, we got that, and then down, and then it was after August that we thought that then the decline would be more serious, because like on lumber, you can have a seasonal low in October. In copper, you can have a seasonal low around November. And then for crude oil, you can get a seasonal low in kind of December or January. So, it's not going to be good. If it's this bad now, what's it going to be like when winter comes? So I think that a cyclical peak has been put in for industrial commodities, and this will reflect on other parts of the spectrum, because industrial commodities coming down reflects that through the whole business and commercial community, pricing power is going away, and if they can't have any pricing power, their earnings disappear. And then as earnings disappear, they have problems in servicing debt. And then you've got the credit rating agencies like S&P and Moody's who are looking for this sort of thing. So, gosh, it's an old cycle, but there's nothing anybody can do about it. And here we are, industrial commodities heading south, is suggesting that this business expansion is pretty close to being over. The last big peak we had in industrial commodities, well, in the base metals, also was high for precious metals, was in 2011. And gosh, on that one, we had all kinds of technical readings that identified the top. And then going back to 2008, that was the big high for crude oil. And that one had all our bells and whistles going. So we have been bearish on industrial commodities from that 2011 period down, and then have caught some of the recent rallies. And as I said, on this one, for this year, the high was likely to be around May, which we've got, and then down, and it's turning down quicker than we'd thought. But nonetheless, we'll still watch for seasonal lows much later in the year. But it also has, as I said, implications to the rest of the economy. So we would be avoiding low-grade corporate bonds, junk, high yield stuff on this one. It's been a good market for those things, but that's probably over as well.
Bob, what's your opinion of Trudeau's plan to slap carbon taxes on everything?
Well, there's only one word in there that you want to focus on: tax. So what it is by putting carbon on it, it then, for some elements in society, is a compelling vision. And governments and compelling visions are usually quite dangerous. And actually, Jim, it reminds us of the old definition of a promotion. And that is, at the beginning of the promotion, the promoter has the vision and the public has the money. Then at the end of the promotion, of course, the promoter has the money and the public has the vision. And this is what carbon tax is about. They've invented a hobgoblin and an imaginary threat of, if not global warming, then climate change. And the promotion is involved linking climate change to CO2, and particularly CO2 generated by modern industry. And this is a whole lot of nonsense. I originally took a degree in geophysics and have stayed up to date on, and I'll just throw in that within the field of geophysics is the study of climate, ice ages and interglacials, and so it's been a long time fascination for me. And the promotion of man-caused global warming and then man-caused climate change really has been one of the greatest promotions in the world. But take a look that so many people have the vision, and the promoter's been the government, and it has the money. There's money rolling into this thing, and yet these greedy guys are aiming for even more with this carbon tax. I think Ontario, with a change of government there, is a very solid no, and other provinces are not as solid as they once were. So, and if we get another cool winter, the public's fascination, or at least being gulled by the global warming promotion, is going to become a little more common sense, a little more skeptical, and there's nothing wrong with skepticism.
On another front, Doug Ford now says he will allow private pot sales in Ontario once pot is legalized October 17th. A good move on his part?
Oh, I think so. Why invent crimes? And people are going to transact in pot and smoke pot. That's all right by me. It's a private decision. And, of course, what is happening here is the governments have figured out, here's something else we can tax. So, no, I can't criticize that one. It makes sense to have less invented crimes, and I'm all for that.
We'll have more with Bob Hoye right after the break. Plus, we'll have a listener question from Belgium.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Bob Hoye. Bob, we have a question from Frank de Beer in Belgium. Bob, we've been talking about the post-bubble contraction for a long time, and this bubble seems to be running on Duracell batteries. I'm not convinced yet that this fall will give us the opportunity to get the contraction started. What if we get a correction that sets the stage for a final blow-off? I know that values across the bond market and even parts of the stock market are insane, but what if this crazy market gets even more insane? Too many experts are forecasting a coming decline. What if the market can rise into a bubble top after central banks retreated from the scene? Would that not be the real and ultimate bubble top?
Yeah, Frank, those are very compelling questions and concepts here. My guess is that the actual bubble top was December with the Bitcoin. That was one of the biggest bubbles ever. And Jim, you recall that in October, we decided that everything was going to get bubbled, even the Dow Jones, and that then, using great speculations in the past, there were a number that had completed in the December-January window, so that was our target. And so they made the high in December and the Bitcoin wildness, and then the senior indexes did in January. Now the NASDAQ and the Russell have gone on to new highs, but the other senior indexes haven't. So it all comes down to what happens over the next few months. If the credit markets have been positive, these have been our friends of the bull market. So the positives have been action in the curve and in spreads. And also part of the friends of the bull market were the industrial commodities. They're gone now. And the curve is still flattening. It becomes a problem when it reverses. And credit spreads are attempting to reverse. So I think, Frank, there's enough changes going on in ancillary items like industrial commodities and the curve and the spreads that says that we're on the path to a contraction, and then you get into probabilities of when is the most likely probability of a contraction. Well, they usually are discovered in the fall. So I think the path is on to ending this bull market, and that would be determined, I guess, by late September. We also used the term that we would have sunshine in the financial markets through till about mid-year, and then after that changing to twilight on the party, and then in the fall, the probability of the twilight zone. I'm sure, Jim, you'll remember that. Doody-doody-doo,
Yeah.
Scary TV. Also, it was outstanding quality. So we're on the path to the twilight zone, and we'll be monitoring it.
Bob, so we had a week where Facebook did a faceplant.
Very good. Were you a skier?
Yes, sir.
Oh, so you know about face plants. You know, I skied a whole lot myself. And funny, I didn't. I would have loved to have thought of that line about Facebook doing a face plant. But there we have it. Okay.
Thank you, Bob.
We'll talk to you next week.
Have a great weekend.
Yep.
My guest has been market historian Bob Hoye. He's the chief investment strategist for chartsandmarkets.com. A reminder, you can forward questions to Bob like Frank DeBear did, and you send them to info@howstreet.com. You're listening to HowStreet.com radio. Find us on Twitter @HowStreet. Our YouTube channel is Talk Digital Network. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.